start recording. And then go back. Let's see. I see make host.
So on the share screen below, just allow,
okay.
I can share. There's you allow me to share. It's okay.
Okay, perfect.
It's okay.
Okay, so we are rolling. Okay, well, thanks everybody for coming in and joining us tonight. This is something I'm really excited about because it's been an answer to a question that I get all the time from so many Canadians who know that I invest in US real estate. There's basically two questions I get asked. How do I set up my business structure, which we're not going to talk about tonight, and where do I find financing for US properties, rental properties and vacation homes and Airbnbs and that kind of thing. And so actually got connected with our guests tonight just recently, and I really wanted to share this with all of my connections and contacts out in our Facebook group and in my network who are Canadians. And actually, I know there's a couple of people that might be watching the replay that are in Australia and Europe, England and Britain and that kind of thing as well. So great opportunity for everyone to learn and maybe make some connections so that you can reach your 2022 goals. So I'd like to invite or welcome, Michal Liviatan. Is that how you say your last name, Michal?
I actually use Liviatan. Yeah, it's
okay.
The international version of Liviatan, which
Liviatan,
is
I'm sorry.
The origin.
Got it.
And so yeah, sorry, I'm interrupting your introduction.
No, that's fine. And then Yair Benyamini.
Yeah, you got it right? Correct.
Okay. And you guys are with Lendai. And so I'm mainly going to just turn this over to you guys and let you go through a presentation and let our guests on tonight ask questions, because I really want this to be about you guys getting value from this conversation, getting your questions answered. But I'll just do a really quick summary about me and why I'm even here hosting. So I live in Calgary, Canada, and I've been investing in real estate in the US since 2009 or 10. I've never invested in Canada except for my own home. I got started and never looked back. So to me, the US feels like home. I feel really comfortable with real estate in the US way more than I do here in Canada. And so as I was saying when we were first getting on here, I haven't done a lot of long-term investments, more wholesaling, flipping, buying houses, like rent to own, lease options and that kind of thing. So I haven't really been able to provide a lot of value and content on the long-term financing and that kind of thing. So this is why I wanted to bring you guys on and talk about financing opportunities. So Yair and Michal, you can take it away. Thanks for coming in.
So first of all, thank you for hosting us. And it's always a pleasure to meet our Canadian partners. And my name is Yair Benyamini. I'm Lendai CEO and one of the co-founders of the company. I'm based in Miami, in Florida. The company we have our Toronto office, the Miami office, and we have the R&D center in Tel Aviv, in Israel. So we already are a global company, and this is how we operate in everything that we're doing. So before we're going to start, if some of you had some experience in real estate in the US or specifically financing, maybe give us the one thing that you heard about or the one thing that you already suffered from trying to get a real estate investment in the US and finance it in the US. So one thing that was said before, you said about the currency exchange rate, and we'll touch it in a while. Actually, this is how financing can solve a big part of this problem, and we'll discuss it. But Lori, Albert, did anyone heard what are the difficulties in getting financing in the US? What's the process there? Any thoughts?
What's the biggest issue?
So one thing that I've faced, not that I tried so many times, but my credit in Canada, no one cares about it in the US. Nice. And if I am able, which I was actually able to get one creative source, but they also limited my amount of deals to like 4 or 5, I think. So that is the challenge that I've faced.
Okay, Michael is saying large down payment required. We have Ludi Levy joining us.
Ludi.
Another fellow Canadian that I see on my LinkedIn, like Albert.
Mm-hmm.
We're communicating there. Okay, so we
So
have.
yeah, so first of all,
Exchange, credit score and documents, and the third thing was large or larger down payment. Go ahead.
okay, so we will touch all of those in our presentation today, but what you first of all need to know that all those problems can already be gone if you know how to work with the right US lenders, and this is what we try to do here in Lendai. So before we dive deeper into the specific US mortgage market and the real estate market, I'll just give you in a nutshell Lendai story so you understand how everything became to happen in the Lendai. So myself, I'm a real estate investor in the US as well, actually in single families, some multifamily, fix and flip as well, basically pretty much everything along the road. And almost 3 years ago, I had a conversation with a finance professor from one of Israeli universities, and he told me that he bought 3 single-family properties in the U.S. and even held a bank account with Chase that he had a sabbatical year in the U.S. And in one of his last visits, it was of course pre-COVID, he wanted to buy more properties, but he said, "Well, I'm done buying all cash. I want to get a mortgage this time." So he went into Chase and asked the teller, "Hey, where do I sign on a mortgage? I want to buy another U.S. property." So the teller looked at him and smiled and said, exactly like they told you, Lauren, said, "Well, we know the properties here just fine. We know how to evaluate them, how to put a lien on them, how to foreclose them. We know everything we need to know on a U.S. property. The only problem is you. You have no credit scoring in the U.S. We don't know who you are as far as AML, anti-money laundering goes, and KYC, know your customers. So thank you, but no thanks. You won't see $1 from us." When he came back, in this case to Israel, to his bank, he asked the same question and got the exact opposite. There they told him, "Well, we know you just fine. Great salary from the university, many years client of this bank, but we don't know the properties overseas. So thank you, but no thanks. You won't see $1 from us either." And this is how Lendai's story began. From this point onwards, we saw an opportunity when we understood that information gap basically in the market, creating good properties and good foreign investors, people that had enough money in their origin country to go and diversify their investment into the US, not financing their investments just because they're not in the same country as the properties. And in order to solve this problem, we built Lendai as a fintech company and a mortgage originator, overcoming this gap and financing those foreign investors in the US. And just before we do the deeper dive, our vision and what we always say, that we want to allow foreign nationals invest in the US and buy real estate with financing as if they were buying all cash, in the same ease and speed that it is to put just a cash down payment and tell the seller, "Hey, I want to buy this property next week or within the next 2 weeks." And I'm happy to say that we already live in our promises on that point. Our fastest closing was 13 days. We're trying to go less than 10. That will be slightly harder, but because of some market issues in the US, but eventually the goal is to go less than a week from application to closing, with a full online process that's already happens today, from application to processing, and even the closing is being made online in the US. So online, you can do it from your home, but it's actually considered as a closing in the US. So that's just in general, a few words about us. Michal here, you wanna represent yourself?
So earlier this year, we have started to feel the growth in the company. And so we opened our Canadian branch, which I run. And I'm actually being the boots on the ground for the Canadians, speaking Canadian, being in the same time zone, and close to be able to really give the service in a timely manner. We know where we know where it's hard for the foreign investor. So what we want is to do it fast. We don't want to waste anyone's time. We want to do it fast enough to support whoever's deal. Being an investor, you just want to recognize, well, you're not really, you're waiting, the opportunity catches you sometimes on the go. You get a new purchase, hearing about a new thing going on, and you want to jump on it right away. And so we're here to provide that in a timely manner. And like Yair mentioned, the ease of use, from the comfort of your home. All you need is a computer and a Wi-Fi signal, and that's it. So yeah, I think we're gonna start with the presentation and dive a little bit deeper into the educational part. What we're doing these days is growing our network and really going for the educational part. You know, it's very common to take the HELOC on your primary residency in Canada and buy the property all cash. So with what Yair is gonna show you in the presentation, we just want to educate Canadians to use the tool of leverage. So go ahead.
Yeah, and I will share my screen. And before we get deeper into the specific offering of Lendai, I want to slightly talk about the market and where the market is today, because as some of you said at the beginning, you're now looking at investing in the US market, you're thinking of doing something new or doing another double down on the investment that you already have in the US. So I think that the first graph that I want to show you is the one that talks about the US housing market in general. So the US housing market, this graph shows you the median sales price of houses in the US in the last 30 years. And you can of course see very easily that everything went up almost all the time. We have a slight downturn during after the 2008 crisis, pretty much until 2012. It's of course looking on the entire US. So some markets went down stronger than the others and some stayed more stable, but that's when we're looking at the big picture. And if you can see what we're doing today and what we're seeing in 2020, 2021, we're seeing that the market is in a all-time high. And there are basically four main reasons to why the market is today where it is, and much higher. Actually, it's even higher than it shows here. It's almost $400,000 today in the market compared to $120,000 30 years back. That's a lot of increase in property value. So the first thing that created this increase in value is a lack of inventory. Like everything in the global markets, there's demand and supply. And after the 2008 crisis, basically there were lack of financing to new constructions of properties in the US, which is 2008, almost to 2016, they were not building enough new properties in the US. And of course, their population keep on growing, immigration, people are having babies and want to move into their own home. So that created a very big crunch on the supply side. So there's not enough homes for the people that want to live in a home, for their home, whether it's for renting a home or for buying a home. Not enough homes, there is a high demand, prices are going up. On top of that, what we see and the jump that we're seeing in 2020 and 2021 is because of COVID, basically created a flow of people from the center of the cities, New York, California, the major cities in California and others, and people said, okay, I'm working from home because everything is closed. There's nothing to do in the city because again, everything is closed. So why not working from a house with a backyard or even if with a pool if I'm in Florida? So there was a migration, an internal migration in the US from the major cities into the suburbs. And again, all those people are looking for a single family rental or to buy a single family, and that pushed the prices up because we said low inventory and more demand. On top of that, the US federal government, and I know it was the same in Canada, in Israel, and other places, simply poured a lot of money into people's pockets. So somebody could sit in his home or even stayed at a job and nothing changed. And someday a check came in the mail, a few $1,000s just because there's COVID. And it doesn't matter if he lost his job or not. So he has no restaurant to go spend his money. He can't go on vacations. And on top of that, somebody is keep on pouring dollars into his bank account. So he has more money to spend. So he can allow himself to buy larger homes because you can go anywhere else and you want a larger home. On top of all that, the Federal Reserve basically dropped the interest rates and the interest went, and we'll talk about it in a second, to its all-time low. So taking money from the bank become the cheapest it has ever been in the history. So people are looking for buy another property because they want to go outside of the city. There's lack of inventory. They have more money and they can take more others people's money, bank money, in the lowest prices ever. So it's pushing them to do so. All those things simply push the prices all over the States very high in the last year and a half or so. And we can see here just an example for a few markets. So we have Ohio and Georgia and Alabama, and it's pretty much, I could have taken pretty much any market. In Texas, it's even higher than those numbers. And you see an amazing increase in 1 year, 4 quarters. This is what I took the numbers here, 11%, 14.5%, 12% in the price. That's crazy. A regular year in the US history is around 3% appreciation, 5% in the strong markets. So those numbers are from the US government official website. I can show the source if you would like it afterwards. And this is also something that's always very, very interesting in the US market. There's a lot of data. If you know where to look, you can find so much data on pretty much anything you want in the real estate world. And it allows you to get basically make smarter decisions. So as we said, the prices of the homes went up nationwide, basically. On the other side, if we're looking on the mortgage market and what happened in the US at the same time, and as we said, there's a correlation between them, the mortgage prices, and again, we took the last 30 years, have dropped over and over again from around 9% to an American buying his own home in the 90s to around 6 to 8% or 7% in the 2010, 2008 crisis. And it went down to almost 2% in 2020 and 2021. So the interest rate basically dropped. We can, if you want, we can share exactly what happened behind it, but I'm just going to show you what happened and not the reasons to exactly why it happened. But the mortgage rates have dropped significantly. So if we're putting those two graphs together, and we can see the green line is the mortgage rates that was going down and down and down, and you can see the blue one, which is the property value, which is going up and up and up. What I want you to take from this presentation in this part is the delta between them. So you'll understand what's the situation now in the market. So if you were lucky enough to invest in the US anytime before 2020 and bought for rental properties, for example, now your property worth much more than it was before. And taking money on top of this property, basically extracting the capital with a mortgage, is as cheap as it ever gets. So the delta here now, and you can see it, it's like a time clock. So the delta between them, that's what's pushed the US market so much stronger into the refinance market and cash out refi specifically. And we can see that in 2019, there were $2 trillion of mortgages issued in the US. In 2020, there were $3.9 trillion of mortgages, mainly because of the refi, because American investors and American homeowners understood this exactly delta. So they understood that the price of their home is higher than ever before, and they understood that they can take out as much equity or replace existing loans on their properties in the lowest rate ever before. On top of that, and this is something that's important to understand in the US market, because it's pretty unique to the US market, is that in the US market, you have something that's called a 30-year fixed loan on residential properties. This is something that is, I don't know if there are any other state or country in the world that allows that. And from a banking point of view, that's crazy. So somebody can take today, or could took a year ago, a mortgage in 2% or 2.5 if he's an American living in the home. And this will be the rate for the fixed 30 years to come. Or if you can take today in 3 to 4 to 5% mortgage rates. And this will be the rate no matter what will happen in the market. And we'll touch it a bit in a few slides, and we'll talk about what happened when this thing is going on. When you have a fixed rate, and today, when the mortgage are at the lowest point ever, and how it can allow you to protect yourself against inflation and against other things that can happen to you along the next 30 years. Any questions on this part? Great. So again, if you were lucky enough to own a property in the US, free and clear of financing, that's the time to refi those properties and take the cash out so you can reinvest it in the market. So just that's what I want you to take from here. This is just to give you a general notice on where the Canadian market within the US investors, because we're having a lot of focus, and this is why we have a branch in Toronto, because Canadians in the last years are the biggest investors in the US market, in the US residential market, and they always have been between basically Canadians and Chinese or Mexicans. Those are the three biggest investors in the recent years, and the Canadians are taking a bigger and bigger portion. As you know, there's a trade war going on between China and the US, so there's less and less investors coming from China, and Canada is actually taking the first place. So that just, you can be proud that Canada is in first place. So now I want to touch a few things that sometimes people think that are taboos, or sometimes people are not educating themselves enough on why take a mortgage, what are the advantages, why good investors are taking a mortgage. And the first thing that is not even here on the presentation is the ability to use other people's money is basically what separates the real estate market from the stock market. Because when I'm investing, I want to buy Google shares. I have $100 in my pocket. I can buy $100 of Google shares. But when I have the same $100 in my pocket and I want to buy real estate, and I can lend money from the bank against this real estate, suddenly I can get $400 or even $500,000 of real estate. And that's one of the biggest advantage in building real estate, that you can use OPM, others people money. So the first point, and we touched it, and related to that, is that using financing can double or even more than double your buying power. So instead of buying a property in $200,000, you can buy a property in $500,000 if you get 70% LTV, or more than that, if you can buy two properties of $200,000 with the same equity that you had before. So now you have two properties and not just one. So two income generating properties. Another thing, and we can touch it a bit further down the line, that if you're doing financing or your investments in real estate, and it's not just in the US, the cash on cash return is simply higher. So if you're, and that's just as a rule of thumb, when do you know that financing is good for you? So as long as the mortgage rate, the interest rate for the mortgage, is lower than the IRR, the return on investment that you're doing on the investment. Let's say I have a $100,000 property and I'm making 10%, $10,000 a month. If I'm taking finance that is cost less than 10% a month, 10% a year, that means that the cash on cash return will be higher. If I'm taking a mortgage in 4%, that's even much higher. And so I can sometimes even almost double my cash on cash returns just by using others people's money and getting more return on my investment. Another thing that is related to the first point that I said, that basically a lot of people that I've talked to said, no, I don't want to get a mortgage because somebody else has their hands on my property and it's not my property. So he can take it if he wants to. So first of all, a bank or a lender doesn't want to take your property. He's not in the real estate business. He's in the finance business. Us as a lender, if I need to take a property, and we have never had to do that, and I hope that we will never will, and I'm pretty sure that we will never will. If I need to take somebody's property, it's mean that I failed in my job, because all I want is the monthly return from the mortgage. I don't want to take up the property. If I wanted to buy a property, I would build a real estate company and not a mortgage lender bank. So first of all, understand that the bank is not your enemy with the mortgage. He wants to get his returns and you want to get your investment back and the money back and buy more investment property. On more than that, if you have $100 and instead of putting all your eggs in one basket and buying one property, if you take, let's say even 50% LTV and you're buying with $100 two properties, as we said before, now your equity is divided between two homes. So if something went wrong with one of those investments, let's say the house is crashing even, somebody, a hurricane came and took the house and the insurance doesn't want to pay you, you still have another home and you still have half of your equity in another home. And just think about doing it when you're doing 70% LTV. So you have, instead of $100, $100,000, you can have three properties in $100,000 with the same money. So you're even diversifying more than that. On top of that, and that's a few things that are related to the US market specifically, is when you're doing a loan on your property in the US, all the costs around this loan, from the appraisal that you order to check the property, from the title company, from the taxes that you're paying as part of the mortgage, everything that related to that, including actually the interest rate that you're paying on a monthly basis, all those costs are deductible against the income coming from this property. So, and this is something that a lot of real estate investors in the US are doing. If you plan yourself correctly, you can almost not pay any taxes in the US, if you're doing a good analysis of how to pay your taxes and how to use expenses, depreciation, and other sources of costs to decrease your tax payment in the US. So actually, when you're looking on a loan and you're saying, no, this loan it cost me $5,000 in origination fees, and on top of that, I have a 425, or let's say 5%. Let's take an easy number, 5% of interest rate. Actually, the real interest rate is not 5% because it's a deductible expense against your income. So the actual cost is much lower than that. Of course, I'm not a tax advisor. You need to have a good tax advisor to help you plan it in the right way.
We have Michael here. I'm just I'm just doing a commercial for Michael. If you need tax CPA services, he's right here.
Yeah, and if we're talking about the tax, so we can jump to the last one for a second. So one thing that, again, if you are lucky enough, or you already now have 1 or 2 properties or even 10 properties, and those property went up in their prices. So you bought a property in Atlanta, let's say $250,000, and now it's already worth $350,000 or even $400,000 because the Atlanta market went crazy. So you can sell this property and take the capital gain. But the problem there that you will need to pay taxes, because once you sold the property, you need to pay tax. On the other hand, if you're doing a cash out refinance on this property, you're not paying any taxes. So you can take 70% out, so almost $200,000, slightly more than $200,000. So you can actually take all your equity or almost all your equity back. And you're not just not paying taxes. As we said, all the costs around this loan is actually tax deductible. So you even get tax deductions instead of paying more taxes. And on top of that, I think this is one of the most important things when looking on foreign nationals investing in the US market. Most of us, now I live in the US, but I used to live abroad. So when I was investing in the US, it was remote investments. Sometimes I could fly to the property, but many times I just had to trust my boots on the ground or to trust someone that I sent, but you never know exactly what's happening. When us, the lender, coming into the picture, we won't finance the deal if it's not a good deal. So we're sending the appraisal, and we have an underwriting team that evaluates the property, and we're checking the title, and we have algorithms in our case that we spend millions of dollars on building to make sure that this investment property can really maintain the debt service, and this is a good investment property. So if we're saying no to the loan, that's a red light that you need to say, okay, there's a reason why Lendai didn't want to finance this property. Maybe I need to dig deeper. I can give you many examples that I think the best one is we did a refi for one of our clients on a portfolio of 4 properties. All the properties were leased, paying month to month, everything was okay. And when we send the appraisal into one of the properties, I can still remember the exact word because I was so, somebody sent it to me within the company. There was a picture of the kitchen and there was the following wording. The kitchen floor is sinking into the basement, but I couldn't get into the basement because it was so filled with mold that it was unsafe for me to get into the basement. And this is a property that the tenant pays $1,000 a month every month, like a Swiss clock. And the foreign investor living over the seas didn't even know that because his management company didn't tell him anything. And what would happen if tomorrow this tenant is going out? Before he can put in a new tenant, he will need to spend $5,000 to $10,000 to $20,000 just on repairs that he didn't even know that his management company are not doing a good enough job for him. So what we did, we of course discovered that so he can address it in a timely manner and not wait until the flow will collapse into the ceiling, to the basement and not just sink into the basement. We had a lot of problems with titles that we saw people that has lien on the property and they didn't know that. We had people that the insurance policy wasn't valid and they thought that they have insurance, but they actually didn't. What we're doing a double due diligence on the investment and making sure that everything is aligned. So if we finance it, it means it's a good property to invest in. And specifically for foreign nationals, that's a very good advantage because we have the same interest. We want the property to work and generate income. And you have, this is exactly what you want. So that's just one of the examples. And specifically to what we discussed before, Michal, you want to touch on currency exchange rates and how financing in the US can help on that? For specifically for the Canadians? You're on mute, Michal, so we can't hear.
Good point. I think I want to start with first a question for Calvin. Are we looking at around another half an hour? Just so I'll.
We can go
we
all
can
night
go.
long if you guys want.
Okay, you guys are having fun. So I want to start with touching the problems. One of them was currency exchange. So Yair, you can pull out that slide so we can all see. Before that, I want to actually start with Lori that mentioned the documentation. So that's exactly what we are doing in every country of origin. We are supporting, we're looking at your documentation in that country. So if you're Canadian, for example, like most of the group here, we're going to look at your T4s, your NOAs, passport, credits, Canadian credit score, and your pay slips. So so as far as documentation, I think it's an advantage, or you already feel more comfortable to share that information, and obviously there is someone on the other side accepting that and knows how to read that. So this is specifically to Canada, but Lendai being a global company, we also take the Australian documentations in Australia and the British documentation in England, etc. So this is one problem already that we're solving. Yair, you want to say something?
Yeah, no, it's exactly part of the system that we built. Is once you start the process, the system understands what's the country of origin for you, where you're resident, and the entire process from this point onward will be suitable for you, for your documentation, for your credit system, and we build it in order to basically, because we're not another US lender that also does some foreign nationals if a good borrower comes into the zone. All we do from dusk to dawn is just foreign nationals. So we build a system to support our foreign national buyers in order to help them use their own credit scoring, their own documentation. It's even they don't even need to translate it if they're living in a country which is not in English. They could just upload it. We'll do all the rest. Our system basically is doing all the rest, and we're taking care of it.
So thank you for the second problem that Michael brought up. It's the currency exchange, and unfortunately you had a bad experience like you shared with us in the beginning of the call. So obviously we can't control, we all want to invest when the US dollar is low. Back in the day it was par. So everybody was just flooding into the US. And so we really can't control, if it's a little bit, if it's weaker or stronger against the dollar, the US dollar. But what we want is to invest right here and right now. We already learned from back in history that the time is now. So what we see here is cash versus financing, where in US dollars, and this is the average price of Canadians spending on single family in the US. So the average is 400,000, which would be 520 Canadian. And then against financing, when you have to put 30% down payment, so 120 US dollars would be 156 Canadian. So you're basically minimize your exposure to the US dollar. So minimize the exposure and minimize the risk, right? Anyone have questions on that? Michael, would you like to share with us maybe an information? I'm sorry, I keep mentioning your name, Michael.
The
No,
CPA.
no worries.
So basically, as Michal said, trying to bet against foreign exchange is something that I don't advise anyone, because you never know what will happen in the market tomorrow. And all we can do is just minimize the exposure. So we're buying a US home with US dollars, and the returns are in US dollars. So the chances that something will run wrong and it will affect us in the same way are much lower. And again, with US dollars, you can buy anywhere in the world. So US dollars can help you when you want to buy something in the US. It can help you when you want to buy something pretty much in any country over the world. If you want to buy stocks, if you don't want to buy other real estate. So it's the global global currency. So for you to work as much as you can with these currencies, simply de-risk your currency exchange rates and risk.
Now I have sorry, Yair, I'm gonna just finish with my last point. I think the third biggest problem that nobody here mentioned, and it's important to talk about, is finding someone who is trustworthy to work with you in the US, where you're in Canada or anywhere else in the world. The niche of private lending, non-QM lenders, is you got to go with someone you trust. So I just want to make a comment on that with Lendai and our very Lori, in the middle of my sentence, oh, you got my attention. Is there a way to integrate
the 1031 exchange?
1031
I'm sure you know what that means. Well,
Yes.
you probably know what that means.
Sure.
So the 1031 exchange, it depends. I'm not sure that now a foreign national can do a 1031 exchange anymore.
But let's touch it later, because I just want to finish here. Not for Canadians. Okay. What I'm trying to say is that with all this beautiful and very fancy technologies, which we are spending a lot of our sources on, I want also to mention that when you do have the boots on the ground, I don't know any other US lender that's sending boots on the ground and branches with the foreigners that they're working with. And by doing that, by taking that actual person to relate to his clients and talk to them, it also shows the trust and building a relationship. So in Lendai, working in a B2B model, we partner with partners such as Cal here that hosting us, and that's very important for us to create also a network of people that can, when I say people, I mean partners and investors that are trusting each other and sharing the information. And you know that if you work with this person, you rely or you trust on their due diligence and service. And that's another a big fear for many Canadians that see a website online with an online process and everything is, you don't know the people behind. With Lendai, you do get to know at least the representatives that guiding you through the process.
Yeah. So I wanted to give you a slightly look on the back of the stage on how U.S. lenders are looking on investment properties and what are we examining when we're examining a property. So the first thing is, of course, the property value. So when a U.S. lender is looking on a property, you want to buy a property $200,000, or you want to cash out on a property that you think worth $100,000, we first of all need to know exactly how much it's worth. So the regular lenders are simply using just the appraisal. Companies like us, we have our own algorithms that allows us basically to underwrite the property and give you a pretty much point of sale mortgage to give you an answer how much money you can lend on this specific property. Of course, everything is subject to full underwriting and appraisal, because we want to see that there's actually an actual house and the kitchen floor is not sinking into the basement. But we first of all need to see the property value. That's very borrowed. The second side is this, what we talked before. U.S. lenders want to see the borrower credit scoring. Everything in the U.S. goes after the credit scoring. So if you're just looking on the US credit scoring, you have a problem. If you know how to look in both sides of the border and looking on the credit scoring or building your own, like we did, your own credit worthiness algorithm for foreign nationals, then you can evaluate if you want to lend money to this specific borrower. And the last thing is the property DSCR. So DSCR is basically a short for debt service coverage ratio. What does this mean? It means that when a US lender, and specifically for investment properties, is looking on the property itself, is looking on how much cash flow is coming from this property. So let's say it's a property of $200,000 and the monthly rent is $2,000, just for the easy example. But actually at the end of the month or at the end of the year, it's not exactly $2,000 because there's taxes to be paid. There's management company fees, there are repairs, insurance, sometimes vacancy. Not the property is not always full, is not sometimes it's vacant because there's a tenant that's going out and then you need to pay to the management company 1 month ahead for bringing another tenant. So there's all kinds of expenses around managing a property in the US, like in any other place. So a DSCR is trying to evaluate exactly how much cash flow is coming from the property. Let's say all the costs, let's say, takes 50% of the income. So you have only $1,000 that are actually coming from the property. The DSCR rate is that determines how much debt this specific property can cover. So for example, if the DSCR rate is 1.1, for example, so the debt service coverage ratio means that if after cleaning all the expenses, there's $1,100 stays in the property, the monthly payment of the mortgage cannot be higher than $1,000 because it's 1.1, the DSCR ratio. So, and just to give you a bulk number, every 500 in the current interest rate in the market, every $500 of monthly payment equals to $100,000 of mortgage. So $1,000, which means $200,000 of mortgage in this example. So when you're examining the property that you're looking at and you're thinking of taking refinance, you need to take it into account. And I'll give you an example. We had a borrower that had a great property that was worth around $300,000. And it was a great property, but the tenant in this property paid only $1,200. So he wanted to get 60% in this case out of the property as a cash out refinance. But because the tenant was paying almost $500 less than the market average in this neighborhood, there was not enough cash to be able to pay for a $200,000 loan. So we were reluctant to give him the full amount that he wanted because there was no one checking. And we told him, if you take out this tenant and bring in a tenant that pays the market rent, which is almost $1,800 in this case, then we can give you more money because your debt service coverage ratio will be higher. In this specific case, he said, well, it's a tenant that lives in this property for 5 years. She paid every month, even during COVID. So I'm better off getting $1,200 every month and no vacancy at all for the last 5 years than getting more every month and getting a larger loan. So that was the decision that he took. But he knew basically because we explained to him that you want more money, you need a better coverage ratio. So this is every time that you will speak with a US lender specifically for foreign nationals, if he's willing to work with foreign national, this will be a big part of the decision. And it will help you to understand, because you also, again, you want the property to cover the monthly payment. You don't want it to be that you need to bring money from your own pocket to cover for the mortgage payments. You want the property itself to maintain it and will have a delta on top of that of a cash flow. So if the mortgage is too much,
we don't know in Canada what is cash flow. You'll have to explain it to us.
Yes.
I mean,
what is this thing you speak of?
Yeah, what is this debt service coverage ratio? We don't know. I mean, in this situation right now, I feel like, sorry, I'm just gonna say a quick note. In the situation with Canada right now, the market is, it's such a big bubble that you can get into, and if you got in, you're lucky, and then if you got in as an investor, I don't know if you're breaking even, you're doing a good job. And I know many friends and investors that are running on negative cash flow and still be so happy because of the appreciation, right? So, so this situation led so many young professionals, I think, like all of us, and even seasoned investors, to go south of the border and put, you know, we talked about it's also relating to the currency exchange, but when we go south of the border, we have to know what are we getting for the dollar. So yes, we suffering from the dollar exchange, but how much we're getting for the dollar, if we compare the two, then we're getting much more in the state, and that's a fact. So I think going down to the States and start investing there, maybe one day, or you putting your foot in the door of real estate sooner than later, and maybe one day hoping you could come back to the Canadian market and invest here as well. That's all I wanted to say.
Yeah.
And we got a message here. There's some pocket markets in Canada that, yes, you're totally right. And we actually had a webinar yesterday with other partners in North Bay, and I have partners in Sault Ste. Marie that are do get an excellent cash flow, positive cash flow. I was of course joking. So, you know, I'm not talking about all the 38 million people in Canada, but I do talk about the bigger cities, metropolitans, Toronto right now with an average of...
Michal, I just want to add, just sorry to interrupt you, but when you're looking into investment in the US, and just I'm saying as an investor, it's not just the returns, it's the ease of doing business. And if you're working in red states in the US, let's say Texas, like Cal is doing here, if the tenant is not paying, 3 weeks later, the sheriff comes with a shotgun and taking out of the property. If the same thing will happen in Canada or in Tel Aviv or in London, 3 years later, the tenant is still in the property, not paying anything, and nothing happened to him. So, and specifically in days like COVID, which the market hit some of the people, even in the US, even with all the moratoriums, if somebody was really not paying because he doesn't want to, not because he can't, you can still take him out of the home, which is something that is unheard of in more blue states in the US or countries like Canada and the UK.
Absolutely, I agree.
So the ease of doing business and help us as landlords, which we call landlord-friendly states, help us to do business in much easier way.
That's right. So Lori, to your comment, yes, 10% cash on cash return. That's amazing, and I wish we all could have done that in Toronto, in Vancouver, in Calgary, and any other big metropolitan that I was referring to.
Yeah.
Okay.
You know, I want to do a little deeper dive into what are the products that we can offer in the US, and of course, if you have other lenders. So the easiest product, and if you're looking to buy a US product, a US property in the US, first of all, you want to know how much money you can get. So the easiest and the fastest, simple process is to get a pre-approval. So with our system, you can start the process, and we'll talk about in a few slides on how you can start the process. And within 3 to 5 minutes, you can get pre-qualification. And if you want to, and you can download it, you have the letter and everything. But if you want a pre-approval, you can go another step further, give us a bit more information about yourself. And then within 12 to 24 hours, you can get a pre-approval letter. And
sorry, Yair, can you just share also Calvin's link here?
Yeah, I can share Calvin's link in the chat you're referring?
Yeah, I refer to both. You can put it in the chatter, but
yeah, I will show it in a few slides. I'll show it but what I wanted to say that you don't need to wait for that. You want to know how much money you can borrow once you find the right property for you. Do a pre-approval. It doesn't cost you anything. You already know what's the process is going to look like. You know what information you need to provide, and you can have a letter. When you're going to a US realtor, for example, say, hey, find me a property, the first thing that he will ask you is, do you have financing or not? And no, for the question that said here, the application doesn't hurt your credit scoring in Canada. we're not checking anything from the Canadian authorities. We're doing it internally. So you will need to share with us data, but it's not hurting your credit score. Not in Canada, not anywhere else in the world. So that's the first product, taking a pre-approval to know how much cash you can get. Once you found the property, you can do a new purchase loan, and it starts the same way. Everything starts with Lendai from our partner network. So you either can call Cal to start the application for you, or you can use the link that I just shared, and you can see in the link to apply now. You just need to put name, email, phone number, choose the type of loan that you want to do, if it's a pre-approval, cash out, or a refi. And within a few clicks, you start the process, and you will get a pre-approval or a term sheet, basically. Again, after a process that takes 3 to 5 minutes, we'll ask you a few questions about yourself, a few questions about the property. Our algorithms will calculate the answer for us, and we'll give you an offer. And then once you have the property in hand, you can close very fast. We're gonna do, actually, Michal, I think that the client that we have now, we just discussed this client before. We're gonna, knock on wood, because it's the end of the year with the holidays, but we're gonna break a record, and I hope that we're gonna do it in less than 13 days from application to closing. As I said, we wanna go less than 10 days. We have now a candidate to break the record. Hopefully that the holidays won't push us back, but eventually we can always close in less than 30 days. And you can always ask for mortgage contingency in the purchase agreement for 21, 30 days, and then you can rest assured that we will, of course, be able to close before that. The next type of loan, as we touched before, is a refinance or a cash out refi. So a refinance is if you already have an existing loan, and we see some of our borrowers. We just had a nice loan for, I think, $300,000 or $400,000. So it was two investors that they bought two fourplexes, one by the other. They took hard money loan, very costly. It cost them almost 12%. They bought it, renovated, put a tenant in it. It was two fourplex, as we said. And then after it was stabilized, they came to us to refi. So we took the property value, of course, went up significantly. So we replaced the 10 or 12% interest rate in 4.25 in this case percent interest rate for the next 30 years, and we even gave them some money back because the property value went up so much because they renovated and everything and put the tenants in. So they not just replaced the hard money with good money and and took some cash out back for themselves. And the portfolio finance is doing the same things that we discussed before, but on more than one property. So actually 70% of what Lendai is doing today is people that are coming to buy 2, 3, 4 properties at a time. So we're doing one loan on the entire portfolio, or having already bought 2, 3, 10 properties and extracting the capital from those properties with one loan, one process, and then they can reinvest it, of course, in the market. And one thing that,
on that?
yes,
Yeah.
of course.
With the portfolio loans, are you able to do blanket loans? So say I'm purchasing a new property, but I've got equity in another one. Are you able to use that other property as partial collateral? Or do they have to be all cash outs or all purchases in a portfolio?
So what we're doing, and we did it a lot, I like to say it's buy one, get one free except of closing costs. So let's say you have a property that is all cash now. Let's say it's $200,000 property. So we can take 70% out of the first one. And then when you find another property in $200,000, we can give you another 70%. So you basically buying another property without bringing any cash from home. Actually, you will have extra cash staying in your pocket to renovate, to buy another property. So that's something that we do, but it's not one loan at the same time. You need to cash out and then buy the next one with the financing. We have some clients, actually, we have one doing exactly that now. He's cashing out on 3 properties and at the same time doing a new purchase on 1 property. And it will pretty much be simultaneously. So we will cash from here and bring the money for the other one. So he will not need to bring any money from home, and he will have 4 properties in his portfolio and actually some extra cash for the next one and next one that he's still looking for to buy. It's a Canadian in this specific example. So this is also something that you can do. You can start with one loan and then move to the other. Actually, as of today, 62% of Lendai borrowers have come back to us for more than one loan. So second, the third, some of us are coming also for the fourth, because basically we build a relationship with you. To understand that the process is very simple, and we will help you to build a better portfolio and a bigger portfolio for the future, because we want returning clients. We know you're a good client. We already fund your loan. You're paying on time. So why not give you another one and help you build your portfolio in the US? Any questions here? Okay.
I already answered
I have a
bunch.
couple actually.
Go ahead. Yeah, I
Calvin,
always
go ahead.
prepare to answer questions.
I just wanted to see if anyone else did first. So I know there's some people that want to buy in their personal name. I know it's usually not advised and you need to have some sort of entity, but if someone was buying in their personal name, would you also look at their spouse as far as qualifying them and their income? And would you do that every time or only if needed, or would you at all?
So part of the things that we're looking at is, let's say if somebody is owning, even if it's through an LLC, but is the only owner on the LLC, we will look on the bank account for the family, for the household. So we will look we want to ask for the payrolls for the wife or for the husband, but we will probably see the credit report might show loans that they took together, or their bank account will show their funds that they have on their shared bank account. But we're looking on the owner of the LLC, because the loan is basically being made to a US LLC or US entity. It doesn't have to be an LLC. So it could be an LP or a corp, and tax-wise, we can discuss it later. But the loan is actually being made to an LLC in the US, not to the foreign investor. And to the question that somebody rose here, the loans are full recourse. So we have a lien on the property, ownership pledge on the LLC, and a personal guarantee of the shareholders or the members in the LLC. But again, as long as you're going to pay the mortgage payment, nothing will happen. And if 1 month there's no tenant and he's not paying the mortgage payment, so you bring it, we still have cash in your bank account. We're just doing an automatic ACH, so nothing happens.
So an LLC is not the only form. LP is also eligible. Yes. LP, which is actually more recommended for Canadians tax-wise. We don't want the double taxation. This is something we want to avoid. And so LP or LLP or LLLP, they're all welcome. And when we're saying LLC, we're actually referring to any sort of entity.
Yeah, exactly. Of course, each type of entity will need slightly different documents, but eventually it's pretty much the same.
Well, documents you already have or supposed to have.
Yeah.
You should have.
So I just want to, after talking about the loan programs, a bit about the process. So as we said, everything starts from the partner. So it's either Cal can open you an application. He has a portal from us that you can press on a button, put in your email name and address, or you can do it from the landing page that I'm just sharing now with you guys. Can you see the landing page on my screen?
Yeah, just enlarge it.
Yeah. So you have this landing page, and you can go to you have all the information actually on this landing page. This is actually we need to update. It's up to 70% for Canadians and not 60. And then you can just put in your information, full name, last name, country of origin, type of loan that you want to do. If you want to do a portfolio loan, so you entering the address, you just need to start, the Google will automatically fill on and add another property and another property and another property. That's all you need to do. It's very simple. And I'm not going to press apply because it will create an actual loan application in the system. So I don't want to make, then my IT guys will be angry at me. So I'm just showing you that before, but you have here all the information that we just discussed in this presentation and how everything works, etc. So that's just an option. So
and before you start, just before you start with this, how it works, I want to answer Lori's question. Can you share a ballpark of your rates? So I'm not going to share a ballpark. I'm just going to tell you that our rates are 425 to 525. We have built a system and a product that is very on point and efficient. So we're not going to a full range or a wider range of interest rates. We're not changing the interest rates according to your situation or the asset or the property. We're just, for all of our products, it's going to be at the moment 425 to 525, and get it fast before it comes up.
Yeah. So basically, our model works as we work with good investors and good properties. If it's a property that we want to finance and an investor we want to work with, we will always give you the best offer we can. If it's something that is not suitable for us, we will tell you it right away within a few minutes, and you haven't need to spend any money in the process. You'll say, hey, thank you, no thanks. We can't work with this specific property, or something in the application doesn't suit for us. So you will spend 3 to 5 minutes and you'll know that you're not eligible, or you'll know exactly how much you're gonna get. So it starts with the email or the application. You get an email to your mailbox, start an online application. Once you see how much money you can get and all the closing costs and everything, I don't know if I have it somewhere here to show you how an offer looks like. You know what? Let me just a second to search for you guys a sample of an offer. Just a second. If we have an open conversation, so I could share it with you guys. Just a second. I'll take it from.
Take your time. In the meantime, I'm writing all of the states that we are fully operating in. And like Yair mentioned before, we are staying or would like to focus on the landlord-friendly states, the red states, investor-friendly states, and that's going to be the first priority. Of course, we intend to take over all the 52 states, but our priority is focused on landlord-friendly.
So I'm just going to show you, and actually this is a good example to the Dscr that we discussed before. So I'm just looking for a specific example to show you. Let's see. Okay. So this is how the system will look on your side. This is how the borrower is looking on the property. This is a few open applications that this specific fake borrower has, and she's on the stage of term sheet. So if we'll get into her loan process, in this case, it's a new purchase loan, we will see exactly how it looks. And this is the demo environment. So everything is slightly, it's not the most update, but it's pretty, no, actually, I think it is update. So this is how the process we start. We said you get an email, and then you have a few questions on your personal details, a few questions on the property, and then you see this screen. And this screen is actually giving you all the numbers and all the information you need to see. So in this specific case, it's a property that is worth $102,000. And the offer here is 70, it's slightly more, it's up to 71% in this case, because you always want to make it in round numbers. And you can see that when it's with 0 points, the interest rate is 5.25, and you can buy down the rate up to 4 points to 4.25. And why are the numbers changing from $69,000 to 79? Can someone tell me? Michal, what you? What's the reason there's getting here, the borrower can get to almost $3,000 more? So I will explain. So as we said before, we have the Dscr rate. So our system is calculating this property can maintain a certain amount of money. So it's up to $381, the Dscr, the debt service coverage ratio of this specific property. So when the mortgage payment goes down, instead of saying, okay, you will get the same $69,000, but you will pay less, we say, okay, you will pay the $389, but you will get more. So here you're getting even more, and here you're getting even more. The reason why you see here 354 and not 381 is because, again, we're always trying to put it in round numbers. So otherwise you were eligible for 72, 522 or something like that. But because we round it, so that's how it looks like. So this is there. In some places we see that the Dscr is amazing. This specific property, the monthly rent, it's a real property, it's a real deal on the table. The properties, the monthly rent is $700. It's not such a good investment. But if, let's say, the monthly payment here, the monthly rent was $1,000, so what would happen is that in all those loans, they would get the $72,000, the 70%, which is the max, but the monthly payment will be lower and lower. So this is just a good example. You can see that all the offers are 30 years duration. You can see here all the loan costs that you will cost, or the origination fee. We take 2% of the loan amount. Estimated third-party fees, that's the appraisal, the title, taxes, and everything that is related to closing a loan in the US. That this is money that is not paid to Lendai. Interest and principal deposit, this is a deposit that we're taking as part of the origination. And the point cost is basically what we see. So here in the story is saying, okay, I'm paying almost $3,000, but I'm getting more than that in the loan. So I'm actually not paying anything, but the monthly payment went down in $30. So for the long period of time, that means a lot.
I'm just going to clarify the estimated, the interest and principal deposit. These are 6 months reserves that are going back to you at the end of the term, or in case of early prepayment.
Yes. So that's just what we saw now is the end of the 5-minute pre-approval online side. And then, you know what, I can even give you the full tour in the system. So once you get to this point, you said, okay, it looks good. You don't need to choose anything. Just say it looks good, I can move forward. In the next phase, you will need to put in the contact details for someone that can contact the appraisal and show him the property. So if the one that connected to you is your property manager, you can just put his details, or you can put his first name, last name, etc. of whoever you have with the property. So once you press order appraisal, what will happen is that our system will automatically call, it's not called, an API call will go out to the appraisal company, and you will get an email saying, hey, an appraisal just was ordered to this property, press here to pay to the appraisal. That's the only cost that you will pay before closing. You will pay directly to the appraisal company because they're going to do work before the closing. So they want to get paid before the closing. You order the appraisal, and then the next phase that you have to do in the process is basically schedule an online meeting with one of our representatives. So it depends where you are in the world, if you are in North America or in Europe. So you have other representatives that work in your time zone. So it will be easier for you to schedule the meeting. So let's say in this case, we're in North America. You can just find it on the Calendly. In this case, it's connected to the demo, so there's no room in this month. Find the date that you want, find the time that is suitable for you, put in whatever you need to, and I didn't put the phone number here. Let's choose, where's Canada? Let's say the United Kingdom for a second. Schedule the event. I'm just making numbers, so it doesn't work.
Just delete one more.
And one more. Yeah.
Or, yeah, there you go.
And the last phase of the process is uploading the relevant information. So in this case, it just the loan that we created is with a few members. It was 5 members under the LLC. So we need to see the identity verification. We need to see 2 verifications. So it's the passport and driver license, passport or other photo ID for each one of the members. This is part of the anti-money laundering process. And then just your financials. You see here a lot of times, because everything is 555, you have the LLC documentation and you have the property documentation. So the rent rolls, the rental agreement, and that's what you need in the property. We can't move forward because we didn't fill in what we need, so the system won't let us. But that's pretty much the last phase. The Llc Details Questionnaire is just a few questions about the LLC, who's the shareholders, how does the shares related to each one. It's more of the regulatory side of the process. It's an online questionnaire, and that's pretty much it. Once you give us all the information we need here, you finish the loan application. That's the entire Let's Talk part, and you're doing it with a representative online. So you don't need to try to think by yourself. What do they need in this part? You have someone online. For in Canada, that will be Michal or someone from her team that will help you to understand exactly what you need to do. Once we have all the information, we have the appraisal back, we have the title coming back clean. Then we go to an e-closing. So you go again online with an e-notary from the US and closing the loan, except in 2 states, which is Georgia and Alabama, which doesn't allow, unfortunately, to do remote online notaries. The legislator, they still haven't approved that. In those cases, we have solutions in the origin country with a notary in your origin country that will sign the document and then we'll send it, FedEx it to the title. But in all the other states that we work in, it's a full online process. And then we fund the loan. So from end to end, the process takes around 14 to 21 days. And your time in the process is actually less than 90 minutes. So it's faster to take a $500,000 loan on your Florida property than take a $500,000 loan on your Toronto property that you live in. You don't need to go into your car, look for parking next to your bank, and wait in line. You can do everything online. Any questions on the process?
I think we're going to move to final questions. If anyone has anything he wants to share with us, that would be the time. Other than that, we showed you the landing page of Calvin. So contact him if you want to start your loan application, and we recommend if you're still shopping for properties, you can always start with a pre-approval to know how much we can fund, how much we can support your deal, show it to the realtor or the person that's dealing with.
I will say something, sorry, Michal, to interrupt you.
No, go ahead.
So, because we saw some people are afraid to start the process, but as we said, up until ordering the appraisal, nothing costs you. So you find the property that you want to buy, and you want to know if you can get some money on top of this property. So start a new purchase loan. Again, you will need to spend 3 to 5 minutes, and you will know exactly how much money we are willing to give you against this property. So you don't always have to wait, okay, I have the pre-approval, and only when I have a signed contract. You can actually use it to know how much money you want to offer on this property. You can say, okay, Lendai going to approve me 70% of this property. That's good for me. So I can bring in a bigger table, a bigger offer. So you can always use the system on that word, and then you're already ready with the term sheet. Once you close the agreement with the seller, you can just keep on ordering the appraisal and move on with the process. So this is just, I'm not going to touch everything here. This is just what's called a credit box. So just all the general terms of Lendai loans. So I'll start from the X factor. We said it's the full online process and the timing to close. The things that you need to know about us is that as of this moment, we work in 12 US states. We said the red state, we're getting into a new state pretty much every month or so. We need an LLC or other LLP, as we said. The LTV is actually, it's an old document. It's up to 70%. A minimum loan amount is $55,000, and a minimum property value, if it's a one property that you're buying or cash out refinancing, it's $100,000 property value. If it's a portfolio, which means 2 properties or more than that, then the minimum property value decreased to $80,000. And this is also something that we were very special. Any other lenders, even lenders for Americans in the US, mostly starts from $150,000, $100,000, $100,000 loan, which is almost a $200,000 property. So because our system is much more efficient, we can do smaller loans because we know how to do it fast and it doesn't cost us so much money. The max loan amount for automatic approval is $500,000. We can do larger loans, basically up to $3 million per loan, but then it won't be automatically approved by the system. Then we would want to do a slightly deeper dive. So the first $500,000, the system can approve by itself. More than that, you can start, the process will start the same way. We'll tell you, okay, we can give you up to $500,000. If you want more than that, we can talk to you and understand exactly what you want and how we can assist. C1 to C4 property condition, it's what you see here. So this is basically property that are livable condition. That's what it's called. C1 is a fresh new built property. C4 is a property that has some deferred maintenance, but it still is a property that is well maintained. So the one with the sinking floor into the basement, that was a C6. Okay, so C6 is a it was a CIS-5, I think, or a CIS-6. Those are the properties that are more relevant for fix and flip. You buy a CIS-6, you fix it, you make it a C3 or C2, and then you sell it to someone else, or then you list it. If it's a new purchase, so the property doesn't have to be leased at the day of closing. If it's a refinance, the property has to be stabilized, which means that it has to be leased at the day of closing. That's an important note to say. That's just basically the general terms on that. So that's our story, and we would of course be happy to work with any Canadians investing in the US. Of course, any Canadian that meets our guidelines. And I'm open to any additional questions about the market, about the mortgages, whatever you want.
I just replied to Cal's question. I want to share the answer with all of you. I don't know if you are reading the chat. So our next product soon to come, hopefully in the first quarter of 2022, short-term rentals, Airbnb, first quarter. Airbnb, VRBO, short-term rentals are more than welcome. Waiting for final confirmation of regulations, and you will be the first to know. Our partners, our borrowers, and our community. We have our newsletters going on, so feel free to subscribe. And in the same opportunity, because we're very close to finish, I'm gonna mention that you can. So again, if you're ready to start your loan application, if it's a pre-approval letter, go ahead and click Cal's link. If you would like to follow us, we're on Facebook, LinkedIn, and Bigger Pockets community, if you're there. And we'll be more than happy to answer all your questions and stay in touch.
Yeah, and I would say take on Michal's advice and register for our newsletters, first of all, because they're interesting. And second, there are all sort of promotions that we do for time to time. So for like, so example, now in December, we offered $1,000 cashback. Basically, we're paying back the appraisal fees at closing if you're closing before the end of December. So everybody that was on our mailing list knew that, and they could start the process and save $1,000 on appraisal fees in the process. So you feel free to join our newsletters. Hopefully, we're not sending you materials every day. It's once a week, once in 2 weeks. We're trying to keep it interesting, but feel free to register. You can do it online in our website, lendai.us. So that's on that part. And the last product that we're working on after the short-term rentals will be in the first quarter is actually second homes. So it's not investment properties, it's Canadians, Brits mainly, who are buying a second home in the US. That will be the product that we're aiming to do in the second quarter or maybe the third of 2022. And basically allowing a Canadian investor or a Canadian citizen to facilitate any kind of transaction in residential real estate in the US, whether if it's a short-term rental, long-term rental, or it's vacation rental or a second home. We will offer all those products to you. We started from the plain vanilla, which is the long-term rentals, and now we're building into the process additional products. Yeah.
Okay, so we have our link here. Thank you, Michael, for sharing Lendai's link. Another RTO, rent to own eligible, not at the moment,
No.
hopefully in the future.
No, so rent to own is basically the loans are for 30 years, and rent to own is almost never for 30 years. So it's always shorter than the loan. So then there's a problem. What happens? We give you a loan, and 5 years later, the property is not yours anymore. So it's a problem. We actually really wanted to do so, and I was working with a tech company that is building a platform for lease options, but we haven't been able to find a good solution at the moment. We can always do the only solution that we can do in those cases, but I think it's not good for the borrowers, is to do a balloon loan. So then you say if it's a 5 years, so we give you a loan for 5 years. We did it at first. We did one we did for It was a 10-year loan. It was a rent to own for 10 years. The amortization was on 30 years, and he has a balloon payment at the end of the loan. So that was one way that we solved it. We did actually one of those loans, but there are some problems, regulatory problems with those kind of loans. You know, if the tenant is not paying, you can kick him out of the home. Sometimes all kinds of things that are slightly make it difficult. But we're always trying to find creative solution to different problems in the market. So keep on shooting us every ideas that you have. We're always happy to hear and to understand what's your problem so we can find solutions for that.
Albert, is my answer was sufficient for you? No? Okay. So I'm gonna explain. So prepayment penalty at the moment would be a 5-year step down. So at the first year, if you want to sell and get out of the loan, you're gonna pay a penalty of 5%. And then on the second year, you're going to pay 4. On the third year, you're going to pay 3. On the fourth, you're going to pay 2. And on the fifth, you're going to pay 1. Starting the 6th year forward, you are free to go. But come back when you're ready for more. That has been almost 90 minutes, gentlemen. Wow. And I feel very, it's very pleasant to be here with you guys sharing the evening. We will have to say goodbye soon. Anything else, any last questions anyone wants to add? Albert, I hope I answered all your questions. Michael, Lori, Ludi?
One real quick,
Yes.
If you have a U.S. partner that you're joint venturing with, or that's part of your LLC, any issues with that?
Well, we're not discriminating against Americans.
Okay. Perfect.
But our product is suitable for the foreign nationals. We can do, we're doing a lot of foreign nationals who just recently we did. Now, I think it was the 3rd or the 4th loan that we did to a couple that did the relocation to the US. So they actually live in the US. They got there a year ago. They work for a tech company. They're making a lot of money, but they have no credit scoring yet. So we're helping them to build a portfolio of investment properties. So there's no problem with the US citizen. We're doing a lot of foreign expats. So Americans, specifically in Israel, for example, a lot of Jewish that came to Israel to live here. Not here, I'm in Miami, but in Israel. I used to be in Israel. So they have no credit scoring because they're 5 or 10 years now in Israel, but they're still Americans. So we're not discriminating. It's okay. The doors are open.
It's also important to say that we built this the model and the company based on financing foreigners. We don't want to lose that advantage. If you know, I'm sure you all know that if you're taking a loan, a mortgage in your country of origin, you don't have to put a hefty amount of a down payment, and sometimes you're getting better rates in your country of origin. So to utilize our technology and to be competitive, we are aiming for the foreigners, the foreign nationals.
So we have another question regarding creating US credit. So basically the loan is not you. The loan is to a US LLC. So it's helping the US LLC, but it doesn't help you because it's a business purpose loan to an LLC against a non-owner occupied property. So it's not your credit, it's actually the credit of the LLC.
Yeah.
All right. Well, thank you so much for all this information. I'm really excited. I wonder if you guys are too. I want to get going and looking for more deals now because we got more options here. So this is great, and I'm really excited for what you have coming down the pipe as well, because I think there's just so much opportunity to get creative and with your new products as well. So this is really fun.
Very exciting. I just want to finish, and Yair is going to say his words after. I just want to finish by talking to our audience watching the replay. Thank you for joining, and thank you for watching. And again, you can follow us and contact us via Cal here.
Sure, I'll
Yair?
post the links and everything underneath this video wherever you're watching it, and that way you'll have access.
Perfect.
I have one question.
Yeah, go
Well,
ahead.
first of all, I want to thank you guys for taking the time to do this, because this is very useful, and I'm sure a lot of people would love to know about that. Yair, you mentioned earlier that you would love to share later in the presentation some of the resources that you usually using that could be beneficial for someone like us, like a starter investor or something like that. So could you share some of them, like
So-
websites and such?
So basically, our system is a proprietary system. We have a team of data scientists that they build AI algorithms. This is why you see Lend AI. So unfortunately, I can give you access to the code, and I actually have no idea how they're doing the magic that they're doing. So I can't even tell you how they're doing what they're doing, but it's actually working.
Oh no, that's not what I meant. I meant you mentioned that there's some really good websites for data.
So you have the data that I showed you about the trends. Let's see if I have it. Maybe I can show the link. Just a second. Now I understood. I think I put the link in the presentation. So let's
Or
see.
maybe, Lori, maybe the easier way to go would be to contact us on LinkedIn, and I can send you a bunch of links. It's all available online, and we can share with you the information.
Yeah,
Would Facebook be
I don't
okay
have
as
the
well?
link available, but you have the census and you have everything you need to if you just know where to look. So yeah.
Here, I'm going to share my email address here again. If you guys want to contact me, and we're going to forward to you any sources we use. It's very, very open, and anyone can read and share it. So.
And we always encourage people and the people that are listening or people that are here, keep on educating yourself. So read blogs, go to Bigger Pockets, go read online, go to webinars like this. Keep on educating yourself on how to invest smart in the US market. And just the last thing is not my words, but it's always correct. Don't wait to buy real estate, buy real estate and wait. That's how I'm gonna conclude this.
Excellent. All right, well, I know we're running a little long, so thanks everybody for coming out tonight on Zoom, and for your time, Michal and Yair, sorry. I really appreciate you guys coming on. I know it's evening, so thank you for taking some time for us today, and for all those that are watching replay. And yeah, if you're interested in, and you've watched this video, I will put the links here so you can contact Lendai. You can go through and put your pre-approval application in on the link that I'm going to provide for you guys. And yeah, reach out to either myself if you can't to find Michal, or Yair's contact information, and I can always ask them questions as well. So whether that's in the Facebook group or however we're communicating. All right, so I'm happy to help forward questions on as well.
Great.
All right, everyone.
Happy holidays, everybody.
Happy holidays.
Thank you so much.
Have a great one, everybody.
Bye-bye.
Happy holidays. Bye-bye.
Bye, everybody.